走进纳斯达克，直击华尔街。近期多个国际组织以及金融机构陆续发布了他们2024年的经济展望情况。根据世界银行最新发布的经济展望情况报告显示，全球经济将连续第3年放缓。另一方面，发达经济呢也面临着很多经济放缓的担忧，包括美国在内的多个发达经济体。根据联合国的一份报告显示，在2024年同样面临经济降速的这样的一个担忧。那么，走进2024年，全球经济将面临哪些机遇以及挑战？另一方面，市场普遍期待美联储即将开启他们降息的这样的一个步伐。那么，对于房市以及劳动力市场又会产生哪些影响？今天直击华尔街栏目走进纳斯达克，我们将采访纳斯达克的首席经济学家 Mackintosh， 请他来谈一谈对于2024年经济情况的展望。Hello, Phil.
Hello again.
Thank you so much for accepting the interview again.
No problems. So it's fun.
Yes, so the first question is about inflation. We all think that the Federal Reserve has implemented the most aggressive interest rate hike in 2023. So how will this affect the economy in 2024? Will this overslow the economy in 2024?
Good question. So obviously interest rates went up a lot in the last 2 years. We've started to see the Fed on pause, and the market expectations are for rates to cut, not just in the US, but in Europe as well. So with inflation coming down, and around the world, the Western economies, inflation's now below 4%, close to 3% in a lot of places. So it's not anywhere near the sort of teens and tens levels that it has been. With inflation coming down that fast, the expectation is rates will come down as well. The question this year is going to be how far and how fast.
Yeah, you just mentioned inflation has coming down in the US and in the worldwide. Energy and food prices fall, and at the same time, wages start to slow, right? So right now, the market consensus is that the US, the Federal Reserve, will start cutting interest rate. Do you think this would happen, and how soon?
Yeah, the big question. So if you look at the market is saying in March we might get our first rate cut. By the end of 2024, we might be down 1.5% from where we are now. So from 5.5% down to 4%. Going out another year, another 0.5% only. If you look at the inflation rate being down so much more, I mean, if you think about 3% inflation rate versus 5.5% interest rates, that's 2.5% real interest rates. We haven't seen interest rates that are positive after inflation for a long time, and definitely not that positive. So I think there's an argument if inflation keeps coming down, and just like you said, energy prices are falling, wages are back under control. If productivity increases, there's a good argument for interest rates to come down even more and even more quickly.
Mm-hmm. And also crowding to 2024 economic forecasts from a lot of organizations as well as financial institutions. Right now, the market is thinking the US economy will eventually have a soft landing, a so-called soft landing. So are you among one of them? Do you agree?
At the moment, everything points that direction. So we started with a really, even though interest rates are going up, we had a really strong consumer in the US that kind of held up the US economy. Our GDP has ended the year really quite strongly. And part of, I think, what held the consumer up as they spent down their COVID savings was the wage increases you just talked about. And so real wages are actually outpacing inflation now. So people are getting a little bit more spending power, even though prices are higher. And that's going to help through into this year, keeping people spending. So while people keep spending, companies keep making money, they don't need to do layoffs. And so that's going to be one of the important factors to watch to make sure we do have a soft landing.
However, according to recent news, technology giants has been through a new round of layoffs. Do you think it's just limited within the technology sector, or it's just gonna spread to other sectors as well?
Yeah, so the layoffs data I think is definitely something we want to keep our eye on. But right now the layoffs data is actually relatively small. And so what's happening, if you look at the uptick in the unemployment rate, it's actually there's some more immigration into America. There's more people coming in for work because wages are up. And so there's more people wanting to work, which is kind of a good thing to make unemployment go up. If we do start to see layoffs, though, I think you're right. There's a risk that we have like a feedback loop where people start to lose confidence in holding onto their jobs. They spend less, which means companies earn less, which means they need to do layoffs to cut costs. And then you could have a bit more of a vicious cycle or a feedback loop, which does potentially cause a recession and risk that soft landing that we're all hoping for.
So what is your prediction for the labor market in 2024?
Yeah, I mean, we're going to watch the layoffs data, but at the moment with the spending data holding up, basically with the fiscal situation, a lot of spending coming through on the manufacturing side, on construction side. The US is doing quite a lot of investment in chips. The construction sector, ironically, is doing quite well because of a lot of the factory building. There's enough jobs out there, and I think we probably keep the economy chugging along, but generally we're expecting to get things much closer to the old normal, where it's not so easy to see the sort of activity levels and the hyperactivity levels from spending in the economy that we had post-COVID.
Another thing is the housing market, because housing market is closely tied to the inflation and labor market as well. So what is your projection for the housing market in 2024? Because we noticed that the housing affordability is at multi-decade low at this point. Do you think the trend will continue into 2024?
Yeah, so what's happened with American housing is kind of interesting. Everybody that went through the 2007 credit crisis realized that when interest rates go up, you don't want your mortgage rate to reset higher. And so everyone's locked in really long-term mortgages. So as the interest rates have gone up, most mortgage payments haven't changed. The trouble is nobody can afford to move because that would reset their mortgages. So we have no supply of houses here. Even though interest rates have gone up, the house prices have actually stayed high. And that's why the unaffordability has increased. You're right, if you look at the affordability of housing, really high mortgage rates compared to 2 or 3 years ago, house prices that accelerated and haven't come down makes housing really expensive. More so than since the 1980s, which remember was when Volcker put interest rates into the teens to tackle inflation back then. So we have a really unaffordable housing market. The good news is interest rates are starting to come down on the long term because as we started talking with the Fed forecasting to start cutting rates, the bond market's already looking out at the 10 years and saying, you know what, in 10 years the interest rates won't be as high either. And so mortgage rates have started to come down. That's already started to spur a little bit better activity in the housing market. And so things are starting to loosen up on that front as well.
We just talked a lot about US economy, housing market, US labor market. If we look broader to the global scale, what is your assessment for the global economy if US is going to have a soft landing?
Yeah, so it's a little bit less rosy around the world. If you look at the European economy, it's pretty close to zero growth. Potentially recession, especially in some regions of Europe. And they've been especially hurt by energy prices after the Ukraine war, but just also less consumer spending. The consumer didn't save as much in Europe, and so they didn't start spending as much in Europe. And with a slower economy, the employment hasn't grown as quickly in Europe, and neither has the wages. So the European economy is already much slower than the US. And Asia, it's not so affected. I mean, Japan looks like it's growing really well. And some of the Asian economies haven't been affected by the inflation the same way that Europe has. So there's little differences around the world. Generally, when you put it all together, especially with emerging markets starting to recover, it's meant to help the economy get through without a recession.
What set the US different apart from the European countries?
So the US consumer is a much bigger proportion of our GDP. They're getting close to 70% of the GDP is coming from consumer spending. Europe has been actually shrinking and it's closer to 50%. So the consumer there is less inclined to spend and their spending doesn't help the economy as much anyway. So really the COVID savings, the wage growth in the US, it's just really helped the US economy to be much stronger coming out of COVID and into the wage hike cycle than all of the other countries around the world. The real question is the US consumer going to be able to push the whole global economy sort of through the next 2 years and keep the whole economy from shrinking?
Okay, so right now we only have one more question left, which is about Nasdaq. So Nasdaq is known for its listings, but in 2023 it was a relatively slow year for IPO listings. Do you think the trend will continue into 2024?
I don't. If you even look at some of the more granular, like month-by-month listings data, you're starting to see companies coming into the market. Some really big listings came through late last year. And if you talk to the private equity businesses, there's a lot of investments that they've been holding on to for longer than they normally want to. So there's a good pipeline of IPOs ready to come to market, people that need some equity market cash. We've got markets close to all-time highs, so valuations aren't holding it back. And volatility is low. So I think the environment is pretty constructive for the IPO market to come back and be a bit stronger than, at least a bit stronger, hopefully a lot stronger than last year.
What reasons do you think that caused 2023 was not a very good year for IPOs?
I think uncertainty generally. I mean, if you look at the bond market with interest rates getting to their peaks, but no one really sure whether the Fed was completely finished or about to cut, and all of the indicators about consumer spending maybe running out of money, there was a lot of uncertainty that we might have a recession. And so that, I think, made a lot of companies a bit nervous about coming into the market and IPOing if the very next year they'd have a recession to deal with. With the soft landing more and more likely, I think that's, again, even more constructive to get companies into public markets, which is great for investors because it's more growth companies for us to buy and hold and participate in their growth as well.